Hi guys, welcome back to another video. In this video, we'll talk about a small expiry view for Nifty's weekly expiry. First thing, last week, let's quickly discuss what happened here. Last week, on the right side of the screen, you can see this is the spot chart, and this on the left side is the futures chart. I'll tell you the reason why we are using both charts, but just quick recap of last week. This zone here, this point is nothing but your 38 to 50% zone. And when the market started to fall last week here, we discussed that if this zone is held, bulls defend it, we will see a rally towards 25,100. This happened. And also we had one small time cycle, analysis in our mind that from 8th to 11th, whatever swing starts from 8th day, whatever swing starts, we will have a continuous move till your 11th, right? One directional move will start from here, and that also happened. Right now, if you look at the market, the only problem with Nifty right now, the reason why I'm using two charts for making one view is because all issues started from this point. This is your 5th of September. You see this pattern here. If you see this pattern very clearly here, and if you see the futures chart pattern very clearly, there is a new low. Like if I highlight it for you, there's a fall from here in Nifty spot chart. We give a pullback and then we make a new low. All right, we make a new low and then market bounces. Same thing if you look at the futures chart on the left hand side, there's a fall, pullback, and then there is no new low. Market bounces from here itself. So the futures chart, what I'm doing is I'm using your adjusted chart. Okay, if you use your contract adjust chart, if you see the bottom right side, if you click this ADJ button, BADJ, that will adjust for your contract. That is your contract changes, suppose irregular gap up and gap down. But in this case, if I remove that option also, this situation is still there. So what is happening in Nifty futures and Nifty chart is very unclear. This is not the first time. This has happened a lot of times before. And I told you that these are called distortions. I think advanced concept members can clearly understand. The next problem which started with Nifty and Nifty futures chart was this point here. If you see this kind of price action happens, okay, expiry day, some expiry day manipulations happened here. Both of these cases, Nifty futures chart resembles some complex correction pattern, okay, in the form of a flat correction, irregular flat correction. It shows clear some sort of a complex pattern. But in case of Nifty spot chart, it kind of resembles, but the internal structure when you see is completely broken. Next part, after the gap up, you see there's a gap up after this consolidation, there's a gap up. After the gap up, Nifty has a clear pattern. The market directly gapped up into wave 3 and then gave some sort of a correction. But if you look at the same case in your spot chart, this gap up was more deep. Sorry, the pullback after the gap up, was more deep. Okay. So this raises some important questions like, what is the entire structure actually doing in the market? What are we doing in the market? Is this a real pullback or is it a fake pullback, and so on and so forth? But if I take one of the instances, if I consider futures chart first, here this correction, it looks some sort of a triangle pattern. Same thing if you look at the spot chart, it is not a triangle pattern, because if you see this, market slightly breaks this swing low, slightly by 1 or 2 points it breaks, but in this case it does not break. So there's a lot of distortions happening right now in the market of spot chart. Maybe like I said, algos are doing all this crazy stuff. But if I take the data from futures chart to the spot chart, let us quickly make a plan for your expiry day. All right. Now, we all know Tuesdays are the expiry, so we will try to focus on single day price action. First thing is that this pullback from the top. Okay, if this is some fifth wave, let's consider this as a triangle. So we know triangle comes in wave 4 and then we are in a wave 5. So if I take this as a wave 5, it started from this point. Is it possible that this is your wave 5.3 and 5.4 and then 5.5? This is one of the cases. Okay, So the same thing in Nifty, exact same thing. If I take some wave 3, wave 4, wave 5. In this case, if this is the case tomorrow, all right, tomorrow, if this is the case, why did I take this zone here again? I updated this in the Telegram group also during the live market. Same reason. 1 second, let me just redraw this. This zone should be a little higher. Okay, so the reason for taking this zone, the reason for 38 to 50% zone is that this will trigger a wave 4 for us. The earlier zone which you draw is from this bottom swing low here, this entire move. That is also possible. The reason why I've told this many times is when you consider a fast rally in the market, when you see a fast rally in the market, and then if the price starts to consolidate and fall, if this 38 to 50% zone is broken, then most likely the market has finished this move, and then we are going for a reversal. So that is the logic which I shared in the Telegram group. Here, in the case of wave 4 from this point, if market sustains below this 25,047 level spot chart, okay, I'm talking about spot chart now. If market sustains below 25,050 level, there's a good chance we will come back and retest 25,000 or your 25,000, 24,950 to 990. Okay, there's a good chance we can do that, but it depends on how the market wants to do. So we have an idea, that basic idea of market giving us a pullback, or we are going for a higher high. Okay, these are the two options. Question is, since it's expiry, what do we plan? How do we plan? It is much better if for an intraday player, it's going to be difficult tomorrow. It's much better if you leave this part, if this rise, unless, because right now, since it's some wave 4 here, it can do entire day time pass also, right? We know the history of Nifty, how the entire day time pass can also happen. So the only option you have is this breakout and reversal. One of the options, all right? One of the options for option buyer, I'm telling, option buyers and futures player. Same thing in futures chart also, breakout and reversal. Or the second option you have is that market goes here, this pullback. After this pullback, market comes back here a little bit, and then it starts a fast fall without breaking the previous high. Without breaking the previous high, when the market goes up like this and this pullback downward starts, what you can do is draw 38 to 50% zone of this rally, and then expect when that breaks, you can expect a fall in the market towards your 24,900. Okay, so double confirmation if you want, then 25,050 level has to break. As simple as that. Same thing if I apply in futures chart, if you see this logic, if this is some wave 4, then we can see a possible wave 5 on top. This is not good for futures players because anytime it can reverse, anytime it can reverse. So if this swing high does not break, if this swing high does not break and market decides to go sideways less in the entire day, if we see a sideways momentum, then again intraday players will have more difficulty. This entire thing pattern has to be completed before your Fed event. If this fall comes, if there's a fall in the market in any reason, whatever reason it may be, if there's a fall in the market, and by the Fed event, which is on your 16th and 17th, if market completes the fall, then it is most likely we are going for higher levels in the market. So same thing in the spot chart. If I say, if this fall happens towards 25,000 level by your 15th and 16th, then what we look for is an end pattern and then up move for 25,200 plus level. So 25,200 will be the main target. After that, we'll see what happens. So if this fall does not come tomorrow or on Monday, Tuesday, on your Tuesday and Wednesday, if this fall does not come, then game is simple. Without the fall, market will most likely go higher, 25,150 to 200. And then after that, market is most likely going to go for a correction. All right. So this is a quick idea we have for the next 2 days, next 3 days actually, till the FOMC gets over. definitely a high impact event, regardless of what is the stance of the Federal Reserve. It does not matter for us because next week again RBI decision. Sorry, next to next week month end we have RBI decision. All that is for those who study macroeconomics, but we have to make a plan, especially for tomorrow. We have a plan. Range bound, we cannot do anything. It is most likely on option sellers day. Breaking down below this will lead to 25,900, 25,950 level. That is minimum. After that, bonus is up to the market to decide how fast it wants to fall. Most likely, the range is stuck between this 300 points for 25,200 to 25,950. So 250, 200 points market is stuck at the moment. It is smarter if we stick to the intraday, signals, how we have pressure signals. We have a system for that. It is smarter to stick with that, all right? So beyond that, right now, don't plan anything big till the Fed event is over. I'll see you in the next video. Till then, take care and be safe.